Praj Industries is the next company we are speaking with. They showed a good performance in the second quarter. There was a margin improvement, although revenues actually were flattish. Shishir Joshipura is Managing Director and Chief Executive Officer of the company. He's joining us now to take some questions. Mr. Joshipura, great to have you with us here. Thank you very much for your time. Prashant this side. So flat revenues, but margins up almost 200 basis points. Could you just describe what happened in the quarter? And, straight off the bat, if you can tell us, what are sustainable margins from here on? What should we expect for the rest of the year?
Prashant, thank you and good morning. Yes, the results are out, and as you mentioned, the top line has not shown any growth. However, the margins have shown a growth, which is now the second successive quarter that we have been able to show that. We have always maintained that in this particular year, the way the orders have stacked up for us for execution side, we expected second half to be very different than first half. Plus the fact that in this particular quarter, we saw a very unusual market development, which was in form of a ban of rice sale to the grain-based ethanol plants from FCI. And that led to almost 8 to 10 weeks kind of a slowdown, both for the new contract finalization as well as for execution of the contract, because obviously some clarity was required. Government, of course, moved very fast, and then they corrected the ethanol prices to align with the market price of the raw material. So that was a big event during the quarter that happened, and that had impacted our top line performance. As we move forward, we have talked about the fact that we are moving in a direction to change our product mix. Also, both our export to domestic share. We are taking several efforts to ensure that our margin story improves, and the effort is in the same direction.
So what should be margins, sir? You're close to 10% now. What should we expect going forward?
So the way I'll put it is like this. All our team is working to ensure that we don't erode what we already gained and only build on what we have.
So at least where you are, 9.5%, right? And maybe some improvement from here on. Got that, Sonia.
Okay. Mr. Joshipura, good morning and thanks for joining in. Can you tell us, what kind of order book execution, if you can just start with telling us what is the exact order book at the moment that you're sitting on, what is the kind of execution that you're planning to do in FY24, and what is the order visibility like over the next 1 to 2 years, the numbers?
So the way we are looking at it is like this. So there have been several developments which have been, of course, India's EBP20 program continues absolutely on its track. So that's the one clear driver for us in the domestic market. The CBG business that we have talked about in the past is beginning to show signs of coming to fruition and becoming stable growth business from its nascent stages earlier on. The ecosystem is developing very, very positively. We have talked about low carbon ethanol in United States, and I'm happy to share that we have the first contract for low carbon ethanol opportunity out of United States included in this quarter. We are also looking at energy transition and climate action related opportunity development, which is essentially green hydrogen, green ammonia and associated projects. We see positive development there as well. So in terms of market drivers and our focus market segments, we see positive news coming from several of these areas. On the other hand, as I mentioned, in the quarter, we had this temporary problem of grain availability, which is, of course, fully passed behind us now. So it's a mix of some positive developments, some negative developments. So we continue to see a positive development for our order book as we move forward.
All right. Hi, Mr. Joshipura. I want to ask you more about the CBG part of that business that you're saying that, it's seeing some traction. But tell us, what do you end this year with in terms of revenues? Margins, you've already told us. And your current mix, I think, is 80-20, domestic and exports. How do you see that mix changing? I think exports is better margin business, right?
So, yes. So, the fact that for the first quarter as well as for this quarter, we have, and at H1 level, we have about 30% of order book, which is constituting exports. So, obviously, this will start to translate into a sales number as well, or a revenue number as we move forward through first quarter of next year. And that's when we will start to see a change happen in the mix of the contracts, as I would put it. In favor of export compared to the previous period. So we clearly see a shift happening. Of course, we have still 2 more quarters to go.
Okay. And margins are better on exports, right?
That is correct.
Okay, and what about on the base of 3,500 crores? What can you deliver in FY24?
We would not be in a position to offer a guidance, but we know from our order book that we have, yes, that we are moving in a positive direction.
Okay, you briefly mentioned about the CBG opportunity out there. So tell us, what's the addressable market? And say in the coming fiscal, what kind of order intake are you looking at?
So if you look at the government launched the Satat initiative, and that has gone through its initial adjustments and alignments that were required in the ecosystem, technology, feedstock availability, and developers and the financials and the financial institutions. I think we have now come to a stage where there's a fair bit of alignment in all these elements for the CBG market. As you know, India is not a CBG economy or not a gas economy. And from that perspective, it takes a little longer for us to create this alignment as compared to, say, liquid fuels. Given that, and the government has a very, very ambitious plan of 5,000 plants. And I'm saying, and we have now seen some of the big sectors, big oil marketing companies from the government side, private sector, are all now working in with plans to set up plants in tens and hundreds. So we are really looking at a period that will unfold in front of us, where if all these plans hold from these companies, we are looking at a very different dynamics emerging in the CBG market. And we are very well poised to...
Mr. Joshipura, the last time I think you had mentioned that there is scope of almost 10,000 crores in terms of opportunity for you. Can you tell us what is, some numbers, if you can tell us in the next 1 to 2 years, what are you looking at from this space?
Well, the thing is this, that if as I was saying, that if the plans hold for these announcements that have been made by both the OMCs as well as the private sector players, then we are definitely looking at a 10,000 crore opportunity of kind of size of opportunity unfolding over the next 2 to 3 years. And we are very sure that we will be in a position to play a definitive role given our leadership position on the technology side.
Okay, all right. Thanks a lot, Mr. Joshipura. We appreciate you stopping by and giving us some details. The grain issue is behind you. You expect things to improve the second half of the year. You're sounding reasonably optimistic about that mix turning in FY25, which will help margins in turn. Good speaking to you, as always.